Okay, all right. Let's rock and roll. Um, so this is going to be the roadmap, for the next, 1 month, 2 months, 3 months, possible. It's possible we can go into a third month because there's a lot to cover, right? I'm going to do my best to make sure that, maybe we can wrap up within 2 months or within 2 months and a week or something like that. But hey, there's a lot to cover. There's assignments, there's homework, projects, different things like that, right? So guys, be ready. Be ready. Today we're going to start with foundation stuff. We talk about the market sectors, market cap, etc. Listen, I'm going to teach this class like you've never heard of, the financial market, right? That is the goal. I have different type of audience here, and they all come from different backgrounds. Some of you may have already been invested in stocks, so you know all these things. It's great. There's nothing wrong with that. But I also do know I'm not ignorant and naive of the fact that I have other folks here that they've never heard of anything stocks, they've never heard anything, the exchange, they've never heard of all these things. So I am going to go, take baby steps, right? It's going to be baby steps, right? It's going to be baby steps here. So we're going to walk through a couple of things today and then tomorrow, and then we'll get into technical stuff, from maybe day 3, day 4 going. Maybe even tomorrow, day 2, we might even start, getting, depending on how we're able to go in today, right? So today is going to be introduction, foundation stuff, right? Baby steps, right? So we're going to talk about that. And then we'll also switch to tools, platforms, technology. There are a handful of technologies, platforms that we're going to be engaging, we're going to be using, right? We need to know how to use some of these platforms that are out there for our work. Some of them is going to be our go-to platform on daily basis. Some of them, as and when, we want to look at what is coming up, we'll go over there and then look at some of these platforms as well, right? Um, we will take a look at that in there, and then we'll get into fundamental, analysis, right? Fundamental analysis over here. So CPI, interest rate, employment rate, there are things that, they do affect the market, right? And so we're not going to be ignorant traders in this journey. When things happen, we really have, full understanding why it is happening like that, why the market is happening like that, because we already know, right? We already know some of the things that moves, that changes the patterns of the market, right? Very important. In this training as well, we're going to be talking about risk management. Risk management is key. As a matter of fact, some trainings, we start with that. And I might even maybe talk about it, a little bit, but, we'll talk about it in full, how, we're going to be using risks and risks to reward. We're going to be talking about that in detail as well. So risk management. We'll talk about the anatomy of the candlesticks, right? When we look at any chart, right, where we do our analysis, it is basically candles, right? And so we need to take a deep dive into candles. What at all is in the candlesticks, right? When you see a candlesticks, what should be coming to your mind, right? Can you guys hear me? Okay. I want you guys to put in the comment section right now for me that you guys can hear me. Can you guys hear me? Am I audible? Good, 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 good. All right. All right. All right, good. All right, great. So we're going to be looking at candlesticks. We're going to be doing the anatomy of the candlesticks in there. Um, we don't necessarily, as traders, trade, candlestick. What I'm going to be teaching you guys, the strategy I'm going to be teaching you guys, and it's not a candlesticks formation trade, but as somebody who wants you guys to understand everything in the market, right? It is very important that we take a deep dive into the candlesticks formation, the type of candlesticks that are out there. We'll go through all these things. We might even go into some of the other types of candlesticks or the other type of candlesticks that are like the Ikimashi and then the others. But we'll be moving very simple in this journey. So candlesticks anatomy, we're going to get into that. There are a lot of them, right? There are so many candlesticks, formations that are out there, and you guys will have a lot of assignments. I will ask you guys to go and then give you some stocks, some ticker symbols of some asset securities. I'm saying go and find me some of these candlesticks that are out there, and you guys will, find it, highlight it, take a screenshot, and you guys will send it to an email, right? You guys will be sending this to an email, for some of our projects, some of our assignment. Um, you guys should be doing that. Um, you guys, will be doing that. So candlesticks is going to be there. Market structure, right? This is also going to be a big one. So the whole session, right? We'll be doing market structure. You see, the market forms in four ways, right? The market moves up. Anytime you look at the chart, right? Let me try and see if I can bring the chart over here, because that's how this is going to work. I talk small and I bring a chart up, and then kind of point things out, and you guys will see, oh, okay. This is how the market moves. Anytime you guys will look at a chart, anytime you guys look at any chart like this, let me bring this up over here so you guys will know exactly what I'm talking about. That is how we're going to be flowing, right? We're going to be moving in and out from different platforms, different places, right? Can you guys see the chart that I just put up? I just put up a chart, right? I just put up a chart. I'm trying to show you guys what I mean by market formation. That's how it's going to work, guys. That's how it's going to work. We're moving in here and there, and then we pull out, and then we move in here and there, and then we move on, right? That is how it's going. So I already have a chart right now. Can you guys see the chart that I have right now? Can you guys see the chart that I have right now? I'm looking at the comment section, guys. Look at the comment section. I want to see you guys flowing. That means, I didn't put you to sleep. You guys are not sleeping. I know for some of you, my East Coast guys, it's like 6, and Saturday mornings guys are sleeping. But hey, we got to do some work, right? So we'll take a deep dive into this and then understand some of these things, because the market, moves in four ways, right? The market structure is in four ways. You will see, a drop, you see a base, and you see a rally, and then at some point too you see a rally, you see, as you guys can see over here, this is a good example. At any point, this is how you're going to see, things, look like. You will see a rally. That means you see the candlesticks, forming, going long. That is moving up, and then there's going to be a base, like this candlesticks over here in the middle, and then there's going to be a drop, right? And then there's something you guys are also going to see something like a drop, and then a base, and a drop again, and then there are also a drop, and then a base, and then a rally. There are four types of the market formation. Then we will talk about this a deep dive, right? We're gonna have a deep dive into this. So no worries at all. This is just the beginning. All right, this is just the beginning over here. So market structure, we'll go and talk about it. Market timing. Timing is everything, guys. Timing is everything. Let me make sure that I can let me make sure that you guys are able to see what I see. I need to log in with a different device, so at least I know when I change screens, I know you guys are looking at what I'm looking at. All right, I'm back to the roadmap. So if you guys can see the roadmap, give me a thumbs up, high five, whatever. Put something in, a reaction in there. Let me know you guys are here with me. Okay, all right. So we'll talk about market timing. Timing is everything, right? If you want to trade a certain asset, you're not going to trade, and I'm going to give you guys best practices, right? Best practices. If you want to trade a certain type of asset, a certain type of security, a certain type of, product, whatever, commodity, symbol, um, anything, right? You will not, go to trade that asset at some odd hours where there is no liquidity, where there's no volume, there's no price action, there's nothing going on, there's no traction, right? And so, my goal is that, so I'll be training you guys. there are times in the day the market moves. There are certain hours that certain assets, securities, etc. There is volume, there is liquidity, and as traders, we want to see that volatility of the market, right? We want the market to be very volatile. When the market is volatile, you get to see how the market is moving up and down. That is how you make profit. We want the market to move. We don't want the market to be stagnant. We don't want the market to be to be stalled, and then we expect that we're going to make money. No, we don't make money that way, right? So we're going to take a deep dive. We'll take a deep dive into market timing. Market timing, very important. Market timing. We'll look at old school support and resistance. That is not going to be our focus for this class, but our focus really is going to be on supply and demand, right? Where there is supply, where there is demand on the chart. Right? We'll take a look at that. We'll look at divergence mastery, right? Market formation, moving average, measured moves, Fibonacci, right? Fibonacci tool is a great tool to have. We will combine that with other tools as well when it comes to our alts, enhancement. Anytime we want to take a trade, right? We want to make sure that the odds are really in our favor, in our advantage, right? And there are so many tools that we're going to be looking at. We're not just going to take a trade just by looking at things and then just saying, okay, let's go ahead and do this. No. That's the reason for this training. So for those of you who attended, who made it to the demo session, we took some trade, but it was just visual, right? I just look at it and say, okay, let's go ahead and take this. But what I'm going to be training you guys, it goes beyond that. It goes beyond just seeing with my eyes. There are alts enhancers. There are enhancers that we're going to use that will sort of put us at a place of advantage, at a place of hitting our target, right? So there are a couple of enhancers that we're going to be using that will sort of boost our position. When we take a stake, we know, when we execute a trade, we know that the price must definitely come to us. Of course, there are days that can miss because of maybe a market, something's going on, like maybe Trump is speaking, right? There's going to be a lot of things moving around, right? So keep note of that. So we will do that. Fibonacci tool is a great tool. We will do top-down analysis. Anytime you want to take it to top-down analysis, zoning process, trends, mastery. I will show you guys all these things. And then indicators, when we go into our chat platforms, there are indicators over there. We don't trade with indicators necessarily, but I'm going to be teaching you guys, right? I don't want you guys to be ignorant of that. So there are so many indicators, but I'm going to give you the relevant ones, right? All the EMAs, SMAs, etc., the MACDs, etc. I'm going to show you guys all these indicators out there, flowing averages, etc. I'm going to show you guys all these indicators, futures, global strap, indicators, so many of them, right? About 10, maybe 12 indicators that are very critical that you guys are aware of them. But again, you don't trade based on what the indicator is telling you, right? If the indicator says buy, sell, we don't do that, right? This is not the place for that. In this class, we don't trade with indicators. Indicators tell you buy, sell, and you go and buy. No, we got to know more, right? We will have to know more. There are so many things that we will need to see. We will need to see a lot of things first before we go ahead and then execute a trade. Before we take a trade, guys, we'll have to see more than that. Yeah, we'll have to see more than that. All right. We're going to be talking about, order execution. The order flows, very important, where we'll look at the order flows and, unfilled orders, where, if price is was to come back, where orders, are going to be filled, there are buyers sitting, waiting for price to come to them. So order flow, order executions, we're going to talk about that. Then trade management, right? When you are in profit, right, you got to know when to be out and when to stay in. Trade management is very important, right? Trade management is very, very important. For example, was it on Wednesday when Trump was speaking, right? It was in my favor, but I got out too early, right? As Trump was speaking, the market was coming down, all right? When market was coming down, the market was falling. Everything looks like, the world is coming to an end. The market was crashing, right? It was all red. Everything was coming down. And you got to be able to know how to manage your trade, right? Instead of me managing my trade, and even up to now, sometimes you are scared that maybe the market might maybe it might go up again, and so you want to just exit out and then take your profit, right? Take your profit. But there are ways that you have to manage your trade if you're in the trade. So I will show you all these things, right? Manage your trade. If I had not gotten out too early, maybe I could have made some good amount of money, right? I could have made some good amount of money from Trump, because it was all red coming down. So everywhere, every stake that you take in there, you're going to be making money. People make a lot of money just by Trump speaking, right? So trade management is very important. Position sizing, very important. Trading business, right? I'm going to show you guys how to handle this as a business. When you're trading, you got to look at it, guys, as a business. You got to look at it as a business. I hope my audio is good enough. You guys can hear me loud and clear, because I'm screaming over here because of this audio microphone I'm using. It's not good, but I'm going to be managing this for today. And then tomorrow, hopefully, my external microphone is going to be right in. Okay, all right. And then we'll talk about brokers, right? So once we're wrapping up with the class, we're talking about brokers, how you can now connect, your live money from your bank account, from anywhere in the world. We're going to be talking about how you connect that, to your charting platforms and whatnot, right? And then from that point on, you begin to drive, you begin to, take a stake in the market and make money, right? So that is how the roadmap looks like, guys. This is how the roadmap looks like. All right, let's go over some housekeeping notes, guys. If you're going to be successful, I'm going to tell you this. If you guys are going to be successful, there are things that, you guys have to keep up with, there are things that you guys have to there are things that you guys have to keep up with. And I'm going to run through some of these things over here. This is day one, guys. Day one stuff, right? Day one. I'm not going to talk about this day two, day three, day four, day one. Day one. If you're going to be a successful trader, start today. Start right now. So this is some things over here that is going to help you in this journey, right? In this 3 month journey, right? So number one is that to be on time, right? You got to join the class 5 minutes early to avoid this important announcement or distraction, right? I'm going to make sure that the Zoom is always open, right? Zoom is be open 15 minutes, 30 minutes to the start of the class. The Zoom is going to be open so you can join in, right? I'm breaking. So, wow. Okay. All right. Is it better now? Am I audible? Okay. This is why this external microphone has disappointed me, but we'll fix it. We'll fix it. We'll fix it. Yeah, we'll fix it. Okay, all right. So so join the class, on time. This is very important. Have a dedicated notebook or journal. Right? As a matter of fact, in trading, we have something called trading journal. Every trade that you take, you need to journal it, right? You need to write it down. This is why, if it does not work well, you look at the trading, whatever trading that you trade that you took, and then you're gonna, investigate it. Why what happened, right? So have a dedicated notebook or journal. Have a dedicated notebook or journal. Keep tracks of notes, lessons, strategies, because there are things that, as I'm speaking, it might not necessarily be on the slide, but I'm just going to be talking because I know some of these things, right? By heart. And so there are things that as I'm talking, it might just come to mind, and I'm just going to say it, and I'll need you to what Write it down, guys. Write it down. If you're going to be successful, it starts right now, right? It starts today, right now, right this moment, right? A personal insight, I'm going to be sharing a lot of things as we move along. So be writing, right? Ensure that you have a stable internet access or internet connection. A strong uninterrupted connection is essential for smooth participation, especially when, maybe we had to go live market session, right? Uh, Use a very quiet environment, right? Reduce background noise and distractions. Use headphones if possible. Very important. Join from a laptop, PC. Trading platforms and chat are best viewed, right? I talk about this in our demo session. I think our last demo session. You know, Charting platforms are best viewed when you are looking at larger screens. There's a reason why traders, experienced traders, and people have been in this game for a long time. They're using 6 screens, 4 screens. Why? They want to see multiple things at one time, see what things are going on. But we'll be okay. We'll be all right with our one screen. You know, um, Make sure that whatever platform that we are using to communicate, telegrams, etc. We have a Telegram group, we have a WhatsApp group, and we any other group that we create. Make sure that you are on, because I'm going to be sharing, trades, on some of these platforms, especially the Telegram group. I'm going to be sharing, trade on this platform a lot, every day, every morning. I'm going to be sharing, trade on this platform. And this is going to be for some time, right? Not all the time. But for my VIP folks, there's going to be a special group for you guys as well, where I'm going to be sharing almost about 20 asset and securities, right? Trade, asset and securities, maybe on daily basis, right? Or maybe for the week, right? I'll try to update them, every now and then. So, asset and securities, you look at the market. I'm going to be looking at the market myself, and I want you guys to be looking at the market, but I'm going to be sharing some trade, potential, right? Let me call it that way. Trade potential. So I might share gold, I might share silver, I might share platinum, I might share copper, I'm going to be sharing maybe sometimes the indexes, maybe the S&P, the Dow, the NASDAQ. I'm going to be sharing trade potential like that, morning. So be watching out in some of these Telegram groups and WhatsApp groups and VIP groups that will be created. I'm going to be coming your way on some of these things, and we might even have a Discord and live session as well in the mornings, or maybe even Sunday night, right after this training. I will like I will want I will ask you guys to join my Sunday night market, overview session, where we'll go through the market, right? So that Monday morning you know exactly what your expectations are, right? All the announcement that is coming, Fed announcement, etc. You're already aware, right? If there's a CPI, there's a PMI coming, whatever, we're already aware because we've already scanned the market, Sunday night. So you guys know exactly what is coming up. Does that sound fair? Does that sound good for you guys? Does that sound good? Let me check in the comment section. Does it sound good? Does it sound good? So make sure that you are in the Telegram group and any other group that put out there, that join. Make sure you are in, so that when we go to the market Sunday night or in the mornings, you know exactly how the market is moving and where you're going to be placing trades, right? I'm not going to be doing that one-on-one. I'm just going to do that for us all at one time so that everybody knows exactly what is coming up. All right. So trading platform, make sure you join. Keep this is going to be maybe some other days where I'm going to be asking you to share your screens, etc. I'm going to be asked to do that, and then mute yourself when not speaking, right? Sometimes WhatsApp has its own thing. Sometimes if you're in a noisy place, etc., make sure that you mute yourself. I'm going to try to mute everybody, because I have that capability over here by myself as an admin. But stay engaged, ask questions, and this is what I'm going to do at the end of every session. If you have a question, write it down, right? Because when you interject and you want to ask the question whilst I'm still speaking, you're going to sort of disrupt my thought process, right? I'm trying to communicate something out, and then you try to ask something, I'm going to lose it. right? I'm going to lose it. So, you have to allow me to finish with everything that, I want to say so that I clear all my thoughts. And at the end of every session, I'm going to leave out about 10, 15 minutes as well for questions, right? Before we wrap up for the day, right? Before we wrap for the day, I'm going to leave some time for questions and then I'll answer different things like that. Do not multitask, right? Don't be doing this and be cooking on the side, be doing this. I'm going to tell you, you're going to be lost. You will be lost. You'll come back and then you'll be asking me, nonsense questions, right? Things that I've already cleared, things that, I've already talked about, I've already explained explicitly, to the core. Don't multitask. Don't be on this call and then you are doing something else that also needs your attention, right? You're going to have divided attention. You're going to come back and ask me unnecessary questions that I've already cleared, right? So don't multitask, right? Avoid be on Instagram, social media, Facebook, etc. You are checking something, you are checking some sports, you are checking some football match going on. No, guys, if you're going to be successful, you make sure that your attention is full here, and you're not doing something else, right? You're doing something else. Complete, pre-class assignment. If I give an assignment, this is going to be very important. Again, if you are planning to be successful, I know everybody here is not planning here to fail, right? But if you're planning to be successful, when I give something out, make sure that there's a reason why I'm asking you guys to do that. I want to train your eyes to see this immediately on the chat, right? So when I give assignments, go ahead beforehand, review them before class, read them, complete it, submit it, get it done. I'm not going to be taking things like, oh, there was something that is happening. I need to go over. Look, we all have busy life. Right? We all have busy life, guys. So if chosen to be here, you got to do the need, right? Right? I'm not asking you to be here. You chose to be here. And so if you're going to be successful with this, make sure that you complete every pre-class assignment, right? Every assignment that's given to us, make sure that it is completely done. It must be done, right? If you're going to be successful, unless maybe you're planning to fail, right? And so you make sure that, if your training is 6 o'clock, time, 10 o'clock, whatever GM, you're in London, my London folks, if you're anywhere else in the world, joining, make sure you're up, you're ready to go, right? No days, there are funerals, wedding, outdoor, etc. But hey, if you're here, that means you're being business, right? And so let's keep our way like that. All right, respect class time. Be mindful of the schedule and keep questions focused during Q&A segment, right? Make sure that you're asking me questions that are relevant to the subject matter of the day, right? There are a lot of things, as you guys have seen in the roadmap. This is not even the complete roadmap, right? This is just a fraction of the roadmap, right? I'm not highlight every small subtopic, everything that we're going to be discussing on the spreadsheet. Just a handful. So keep the topic relevant to the subject matter of the day, right? Keep it to the subject matter of the day so that we stay on course, we stay focused, and then we get things going. Guys, housekeeping notes, right? Day one, housekeeping notes. All right. Have a calculator ready, especially we're going to be calculating, size, shapes, etc. I know you guys all have, calculators on your computer, on your phones, etc. So when we get to that side, you got to be able to calculate breaks, etc. We're doing a lot of math, right? Trading is math, right? So get ready. Prepare mentally, right? Come with a growth mindset, ready to learn and apply, right? Here, I want you to come. I don't care about what you have learned in the past, what you have seen in the past. I don't care about it. What I care about is that you go show up here, right? You go show up here with growth mindset. It's a growth mindset. Am I okay now? With a growth mindset. What does this mean? That means that you are ready to learn like a beginner, right? Like a beginner. It doesn't matter what you've studied in the past, you've seen in the past, you've even started to trade in the past. I don't care about it. That is not my focus for this class. I'm not here to talk about historical data, where you've been and where you've traded, the capital you've traded. No. What we are doing is we are starting from the scratch over here. We're taking baby steps over here, starting from scratch, as if you've never heard of anything before. You've never heard of stocks before. I'm going to go over certain things that is going to be very basic. I want to make sure that even a 10 years old, right? 10-year-old can even understand what I'm talking about. A 10-year-old, a 12-year-old baby, teenager can understand this, right? That is how we're going to, that is how we learn or we become better, right? All right, charge your devices, stay consistent, apply, learn. When I give you something after class, make sure that, you have the whole week, Monday, Tuesday. This class is going to be Saturday and Sunday. There are days that, I might ask you guys to come in, maybe if I have a travel or something, but that is not going to be everyday thing, right? So we might make it up, some weekday night or something like that, but that is going to be one time, two time, in case I'm going to be in travel, I'm traveling somewhere, I'm in a plane, I cannot join a call on a Saturday morning or something like that because of travel, then you guys will get it. But all these will be communicated beforehand, way ahead of time, right? In advance, right? All right. So honor confidentiality, respect the privacy of the group, and do not share class content or recordings without my permission, right? Explicit permission, right? Do not share my class stuff without my explicit, approval, my consent over here. All right. Track your progress, right? Use spreadsheet journal, right? I said in the beginning, right? Having a dedicated notebook to write notes. When taking trades too, you're also going to have a notebook to do your trade journal, right? As well. You log in all your trade. Where did this trade? Where did you, took the trade? Where you took the trade? At what price? You're going to log everything. What was your stop loss? What was your take profit? You're going to log everything, right? You're going to log everything. And you're going to practice. Guys, this thing is about practice, right? This is where we're going to do all months, for 2 months to 3 months. We'll get to some curriculum stuff, very quick. I'm going to get through all the curriculum stuff, get them out of the way. And, this class is going to be about 70% hands-on, maybe even 80%, right? 80% hands-on, and about 20 things about the curriculum, things that I want you to understand, the basics, and so I might bring the slides up every now and then. You learn about different things, you take notes, and then we'll get into the chat, right? We practice. This class is 80%, right? It's 80% what? Doing. Not just what? Seeing. 80% doing. So if you're going to be successful, you make sure that, you are doing it, right? Not doing it and not just seeing it. Don't say that, oh, I'm seeing it, I know what was done. No, 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 no. No, it doesn't work that way. It doesn't work that way. You're going to say that, oh, I watch it on my screen. I know exactly what you were doing. No, 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 no. That is not how it works. I'm going to tell you, you're going to fail with that. If you're just going to watch and you're not going to be on the chat, I'm on the chat myself every day. I'm a chat. If you plan to be a successful trader, you will not just watch on the screen and say, I've watched it. Oh, I see what was done. No, no, no. You have to get your hands dirty. That means you got to get on the chat. If you're going to use TradingView, if you're going to use your brokers, chat, whatever platform that you're going to be using, you're going to get your hands dirty, right? Get your hands dirty. I've talked about this. Keep questions relevant, personal questions, and one-on-one session. We'll talk about them. If something you talk about it, if it's not relevant to class, relevant to progress, make sure you keep it to yourself. When it's one-on-one, you get to talk to me or something like that, you can ask the question. And then lastly, right? Believe in the process, right? Believe in the process. Stay patient. Be patient, right? We're not going to rush anywhere. But then I'm going to get the child to start doing. No. Be patient. I want to start making trade. I start making 10 $50. You're not here to make overnight money. You're not here to make magic. This is not a magic class, right? I've been to a magic session. You put something here, put something in a second, and then something happened. No. This is not going to be that kind of session, right? This is training. We are acquiring a skill set over here. This is a lifelong skill set, right? Oh, but can you give me this trade? I saw you Euro USD moving. I saw it last night. Do you think, if you take a trade, I'm going to be No, I'm not even going to talk about it. Right? I'm not going to be answering, to that, because I want you guys to stay patient, practice, right? Stay consistent, right? Don't change the rules. Don't bend the rules. If I tell you guys, we talk about risk management. If I say use only 1% of your capital, you're going to use only 1%. If I say use a quarter, 0.25% of risks, that's how you're going to use it, right? You're going to be consistent. That's how you stay profitable. I know that you're going to lose money, right? There's a saying that goes like this. Let me say this, and then we're wrapping up with a housekeeping note. There's a saying that goes like this: the first mouse, gets the trap. The second mouse and the rest of the mouse that come in, they get what? The cheese, right? You know, when I'm talking about some of these things about don't use more than 2%, I know people want to make big money overnight. I want to make 10,000. I want to make 100,000. I want to buy a Lamborghini. I want to buy a McLaren. I want to buy a house, with big money immediately. Look, I say some of these things. Why? Because the first mouse gets the trap. I've been bitten before. I've lost money before. Why? Because I wanted an overnight success. I want to put all the things. I want to raise 1,000. I want to raise 5,000. I want to raise big money so I can make big money instantly. Guys, in trading, say that slow is fast. Slow is fast. And fast it's going to kill you. Right? Slow, going slow, patient, is fast enough. Come to trading, slow, fast enough, guys. It's fast enough. All right. So stay consistent. Stay with it. You make money over time. It's a lifelong thing. I want you guys to be able to learn it when you retire, when you're working for anybody, corporate organization. You should be able to say, you have your own trading plan. And we're going to be talking about at the end of our journey. Everybody's going to have a plan. Or if your plan is to make $100 a day, there's a way to go about it. If your plan is going to be to make $50 a day, there's a way to go about it. If your plan is to go make $500 a day, there's a way to go about it. If your plan is to be able to make $10 a day, $20 every day, there is a trade plan to go about it. If you plan to make $10,000, I have millions of dollars sitting in my bank account. I want to trade with it. I want to raise 10,000. I want to raise it 20. I want to make $50,000 every day. My father left me an inheritance. Great. There's no problem with that. We'll walk through this journey together. You will draw your own trade plan. You will work with your trade plan, and you will stick with it. All right. So you are building a lifelong skill. It doesn't matter wherever you find yourself, as long as you have internet, you have a computer, a device, anything with you. When you analyze the market, you can see an opportunity. You're going to be training your eyes to see there is demand here, there's supply, there's a divergence here, there's a confluence here. This is likely to come here. Lifelong skill. This is not magic money, a machine over here. I'm not going to promise you're going to make $1,000 overnight. No, it's not going to happen like that, right? It's lifelong skill set we are acquiring, right? It's a lifelong skill. So grab your computer. When I say grab your computer, I mean it. Grab your computer. We want to go and sign up this account because you're going to look at this, in parallel together, right? So that is how you're going to. You're not going to learn by just watching me. You're not going to learn by just watching me. Say, I'm going to be no. You're going to learn by doing exactly as I'm doing. Right? Believe in the process. Stay patient. Stay consistent. Trust the journey. You are building lifelong skill. All right. With that, ladies and gentlemen, I want to congratulate you all for this journey, for coming in. We're going to do this together. We're going to learn a lot of things together, and it's going to be exciting. There's going to be a few bumps here and there. We're going to learn, unlearn, and relearn, right? That is how it works. All right. Congratulations in advance, right? Let me congratulate you in advance. This is going to be a good one. All right. So day one, guys. This is day one. Day one, guys. Can you guys still hear me? Okay, go ahead and put a comment section that I didn't lose anybody. Come on, guys. I want to make sure that I didn't lose anybody. Let me make sure everybody is still here and alive, right? So go ahead, say we are here. Yes, sir. Yes, sir. Yes, yes. Whatever you can put in. Let me make sure that everybody's here. You guys are still listening to me. Everybody, I want to see coming from everyone over here. All right. Okay. All right. So day one, from our roadmap, day one. So day one, we're going to talk about how does the market work. The market works. How does the market works? How does the market works? Right. Um, so the financial market, it's a global system where um, I mean, you and I, we fall into the category of what we call retail traders, right? We say individuals, you and I, sitting at homes, trying to make sure that we can get something, little something from the market. $20, $100, $200, $500, $1,000, whatever, right? We are all what retail traders. As a matter of fact, if you can go up to 50,000, 100,000, we are all retail traders. Because the big institutions, when they trade, you know, when they execute a trade, they're not looking for 100,000, 50,000. When the big institutions, when they execute a trade, they're making profit in the areas of millions of dollars, right? 50 million, 20 million, 100 million, 80 million. They're making millions of dollars, right? So individuals will play a part in there. And then institutions, right? Institutions, we're talking about big banks, right? The UBS, right? The Union Bank of Switzerland. We're talking about the Citibank. We're talking about Charles Schwab. We're talking about Fidelity. We're talking about all these big banks, right? JP Morgan. We're talking about all these big banks, Chase Bank, all these big banks out there. We're talking about, what's the name of banks? They're very common in the Asian side. HSBC, right? For my friends in London, HSBC, all these global banks that are out there, right? They are the institution, they're trading volumes, right? Volumes of transactions every day. Every day you can imagine, there are trades going on in the world. People are trading, different from China, from Singapore, from London, etc. From different places around the world. And all people, they constitute what we call the institution, right? Institutions. They also trade. They are moving big monies around, right? People are moving big monies around. And then governments, right? Government, they buy and sell financial securities like stocks, like bonds, like currency and commodities, right? So the financial market global system where individuals, institutions, government, government buy and sell financial securities like stocks, bonds, securities, currencies, commodities, right? These markets enable capital, right? Capital to flow from investors to entities that need funding, right? These markets, right? The market enable capital flow from investors to entities that need funding. In return, investors can also earn profit. We also invest because invested when you put money in there, and that's matter how big, how small, whatever large amount you put in there, whether $10,000, $20,000, they're all investors, right? As I say, go put in personal investors, right? Traders, right? You're investors because you are investing in the market to earn money, right? So investors can earn profit based on performance, speculation, and market movement, and movement, market movement. Um, so when we get into trade, based off of performance, because speculation, market movement, etc. That's how we earn something back. That's how we earn something. The market function through a series of exchanges, right? That's what I'm saying. I'm going to be teaching this like, I'm talking to a 10-year-old, right? I'm talking to a 12-year-old, basic foundation stuff. Markets function through a series of exchanges and platforms, right? Series of exchanges and platforms where buyers and sellers connect, right? Where buyers and sellers connect. These transactions are facilitated by brokers, right? We will learn about brokers very soon. They are facilitated by what? Brokers, clearing houses and market makers who ensure smooth order execution and price stability, right? So as we riding into this, ride on into this, journey, you guys will begin to talk about brokers. I'll begin to list a lot of I'll list some brokers for you guys. For those that are in Europe, those that are in Ghana, those that are here in contact US, those that are in Canada, joining me. I'll list some brokers that you can use. Where you can use, and that is very favorable to your market or to your region. So we'll talk about them as well. The major financial exchanges in the world, right? We have major financial exchanges in the world. Common ones, are the New York Stock Exchange, right? The exchange that trade on, right? Trade on, invest money. New York Stock Exchange is one. New York Stock Exchange is the largest stock exchange by market capitalization. Home to major U.S. companies like Apple, like Coca-Cola, the Goldman Sachs, etc. Right. That's New York Stock Exchange, the New York Stock Exchange. And then we have another exchange called NASDAQ, right? NASDAQ, we're going to be trading on the NASDAQ as well because there are certain things, especially if you plan on trading stocks. There are stocks that are traded on the NASDAQ, like Microsoft, right? Like Amazon and Tesla, and so many other, tech stocks, right? They all get traded on the NASDAQ, right? They all get traded on the NASDAQ. And then we have, the London Stock Exchange, right? Yesterday I saw news. They are bleeding very bad. I know the American market is bleeding. The London Stock Exchange is also bleeding, right? One of the oldest stock exchanges, right, located in the UK, United Kingdom. So that's the London Stock Exchange, right? London Stock Exchange. Gold is traded a lot. From there, if you're planning to trade gold, it's going to be your best bet. It's going to be London Stock Exchange. But of course, the New York Stock Exchange also moves gold as well. So the London Stock Exchange is also one of the exchanges as well. We have the Tokyo Stock Exchange, TSE, the Tokyo Stock Exchange. The Tokyo Stock Exchange is a major exchange in Asia. Home companies like Toyota, Sony, etc. Right? Major, exchange. Asia, Asia market is also very huge as well. Asia market is huge. And then we have the Shanghai Stock Exchange and Hong Kong Stock Exchange, right? All big exchanges also in Asia. Shanghai is of course in China. Then the Hong Kong Stock Exchange, very big one as well, because all these banks, the HSBC, etc., predominantly based out all these Hong Kong and Singapore, other places as well. Very big. They are present out there. So, the Hong Kong Stock Exchange is very big. A lot of things that trade on the Hong Kong Stock Exchange. These are key exchanges, in China and also in Hong Kong. And of course, there are smaller exchanges all around the world. We have the Ghana Stock Exchange, right? Nigeria Stock Exchange. There are stock exchanges all over the world, and these exchanges, there are different aspects, commodities, and different things that get traded on some of these exchanges around the world. But professional traders, our focus is going to be on the metal financial exchanges. These financial exchanges are the ones that I've listed right here. The ones I've listed right here. What gets traded on the stock exchange? What gets traded on the stock exchange? On the stock exchange, we call something stock. We call something stock. Stock is what gets traded on the stock exchanges, right? Stocks. So what are stocks? Or what is a stock? Or also called, an equity or share. So a stock represents ownership, right? Ownership in a company. A stock represents ownership in a company. I forgot to say this also in our housekeeping note that, every now and then, maybe after an hour or something like that, we're going to break for like 5 minutes or something. I'll need you guys to stretch, take it, walk, stretch a little bit after 2 hours of nonstop, whatever. We might take a 5 minutes break, 10 minutes break or something like that. This is going to happen as well, right? If you have been in some of my IT training, it happens even for, with that as well. We break for 5 minutes, say, get up, stretch, walk your dog out, something, right? Grab a coffee, grab a tea, and let's continue, right? So when you buy a stock, you are essentially buying a piece of that company, right? When you see a stock being traded on the stock exchange and on an exchange, that means, and you have a stake in there, that means you have a piece of that company, right? If the company performs well and grows in value, the company performs well and grows in value, the value of your share increases, right? If you buy one stock of Apple, one stock of Microsoft, one stock of Tesla, and you buy it for maybe $250, right? And if Tesla stock is maybe hypothetically selling for $500, that means has increased value. Whatever your stock is has increased, appreciated in value, right? So companies also pay what we call dividends, right? To shareholders. Some stocks, every now and then, companies, when they have made profit, they share some type of, dividend, right? They give back as well. Um, some companies too, they don't pay dividends. Right? That doesn't mean it's a bad company. Or it's not good. No. It's good. Some companies they use the money to reinvest the money, expansion, research, R&D, research and development, other things like that. Right. But when a company pays you dividends, it's as a portion that we call what, they call their profit. They give a share of that, and that is dividend. It's your share of what you have done, with them, right? Stocks are traded in public exchanges, and their prices fluctuate based on what? Supply and demand. Supply and demand. When you look at the exchanges, all the stocks get traded on stocks of this company. They all get traded on this platform based on supply and demand. Then based on companies' performance, economic news, investor sentiment, all these things, moves the market in different direction, right? All these things move the market in different direction. Um, why do companies sell stocks? Right? Why do companies sell stocks? Why do companies sell stocks? Why do companies sell stocks? I'm gonna switch to another microphone over here. Hopefully that is better than this one that you guys keep saying that is breaking, is breaking.
Can you guys hear me? Can you guys hear me? I just switched to a different one, another third microphone that I have here. Can you guys hear me? Let me see the comment section. Yes, yes, yes.
Okay. Then let me use the other microphone. Let's manage it for at least for today. Right. I'm gonna get this sorted out. All right. So why do companies sell stocks, right? You might be thinking, why do they sell stocks then? You know, why do they sell stocks? So companies sell stocks to raise capital for expansion. Companies sell stocks to raise capital for expansion, product development, paying off debt, or entering new market, right? When companies are selling stocks, when companies are letting new investors come in, typically the reasons why they sell stocks is number one is to be able to raise capital for expansion, right? They want to go into new territories, right? If I'm a company based out here in the US, right? Maybe I've been doing very well in continental US, and guess what? Now want to go into the European market, right? And now I now want to go to the European market. I'm going to need money. I'm going to need money for expansion. Expansion doesn't necessarily means going or presence, expanding your presence or whatever. Expansion can even be even in the local market. You want to expand to even different places as well. That's also another expansion. But on the bigger picture, expansion means you going somewhere that is bigger and better than where predominantly you have operated, right? So companies sell stocks, number one, predominantly to raise capital for expansion, for product development, right? Number two, they want to develop a new product, right? They're coming out with a new recipe, a new secret sauce. They want to do something new, right? So product development, paying off debt. A lot of times, companies can also be offloading a debt, right? They have debt and they want to do what? They want to pay off their debt. And so they do what? They sell stocks to raise money so they can pay off their debt, right? And then entering new markets, right? As well. Now, instead of taking loans, instead of the companies or the organizations going to the bank or financial institution and then say, we want loan, which need to be repaid with interest, selling stocks allow them to obtain funds by giving investors a share in the business, right? So they have an option. Companies, they have an option. They have an option to go to banks, financial institutions, financial services, right? They have an option to go over to them and say, hey, we want money. We want money to expand, to pay off our debt, etc. But when they do that, that means they're going to have, back breaking, shoulder breaking interest that they have to pay. And so instead of doing that, they will rather not take the loans, but what they will allow people into the company. Say, hey, instead of going to do that and then having all this back breaking interest to pay back, and you never finish paying. It's like student loan, right? Well, student loan. When President Barack Obama was president at that time, he was president, and I'm sure he may have graduated from college way back ago. I remember one time he said that they were just about finishing paying their student loans, right? Himself and I think Michelle. Um, and I was like, wow, man, this thing is like forever, right? And it's like, till death do us part. You're gonna keep paying, you're gonna keep paying. So instead of companies going for, some of these back-breaking loans, right? Loans that will break your back because you're gonna be a slave, to them forever. They rather sell stocks, right? They rather sell stocks and allow new people or new folks to come in, and they own equity, they own a share of the business, right? They will come in and own a share of the business, and they also get the funds that they need, right? To be able to do whatever that they want to do. This process benefits both parties. The company gets the funds that it needs to grow, and the investor gets a chance to profit from the company's future success, right? When you invest in, you're very hopeful, very optimistic that the stock of that company is going to appreciate. So if you bought shares in Tesla, whatever, Apple, Microsoft, one day, it's in the hope that we will be partakers in the company's future success, right? So this is the reason why companies, what they do, they sell stocks. When they are selling stocks, they don't just get up and say, hey, we want to sell stocks. They don't just get up and say, we want to sell stocks. No, it doesn't happen like that. There's a process to this, guys. There's a process to this. We have something we call the IPO. The IPO. The IPO. Now, whatever I'm talking about is very important because you're going to be trading some of these companies. You got to know why they exist, why they are there, what brought them there, right? There's going to be days that we have days we call earnest call or earnest report. You have to be aware of this. And if you are trading some of these stocks, sometimes the stock price might fluctuate, it might come down. So this is why, very basic. I'm starting you guys from the foundation. Very important, right? So companies don't just get up and say, we're going to the market. No, that's a process. An IPO is when a private company offers its shares to the public for the first time on a stock exchange, right? It is a company's first step in becoming publicly traded, right? Before the IPO, the company is privately owned by founders, right? Today, if I have a company called XYZ LLC, right? I've owned it maybe 15 years, 20 years, the founder fully owned, right? Um, or, companies, sometimes they are owned by venture capitalists, right? Or early investors. After the IPO, it becomes public. When the IPO is done, it becomes public, allowing anyone to buy its stocks, right? Companies go to public, like I said, to raise capital, to enhance their credibility and market visibility. There are so many reasons why companies go out there, right? Sometimes to what? Enhance their credibility and what? Market visibility. People will know them that, hey, if you're just doing something between you and your wife alone, who knows you, right? You're not visible. That does not give you visibility. But when you go public, right? Or even if you have your immediate family members contribute, they've contributed to your business. It's still not a good, public or image out there, because who knows you? It's just except for your family members, right? So when sometimes you go public, right, you enhance your credibility. People begin to trust in what you are doing, right? And also, of course, market visibility as well. And to provide liquidity to early investors, right? This also provide liquidity to early investors. For example, in 2012, Facebook went public, right? In terms of through an IPO, allowing all of us to participate, to become owners, to invest in Facebook. So 2012, Facebook, they went public. And then all of us today, we have that. But let's take an example of this. Let's say that, my daughter, Michaela, right? My daughter Michaela comes to me and said, Daddy, you know what? I've been trying my hands on, right? I've been trying my hands on this lemons and and I've been doing this lemonade and I think people like it. She have been putting it in front of our house. Our neighbors love it. They buy it. They come by, and make sure that Michaela's lemonade is out there, right? And so they can get a piece, they can get a cup to drink, right? And she has been doing this for some time, for maybe a year, 2 years. We know this is going on, this is very good, right? And so she has carved this lemonade stand, in front of our house and our neighborhood. And I think, is getting to a point where a lot of people are beginning to ask for it, right? It's becoming popular in our neighborhood. Everybody, even from other subdivisions, people from different subdivisions, they all come and they all grab a bottle, a cup, and whatnot of Michaela's special lemonade drink. Special lemonade drink. And for now, we're going to be calling that lemonade drink Make Money. Make Money. Make Money. She carved this lemonade juice from her name, right? Make money. So, she come to me and say, Daddy, you know what? I've been doing this and I think it's about time that, we expand, right? We want to raise capital. So what is going to be the steps right here? So Michaela's, make money. Example, this is how it's going to go. The stage one, growing the business. So Michaela begins by using her own savings, right? Typically, yeah, start with your own savings. You've done it. You've done it. She have been bugging me. The parents, she's been taking money from us, and then as the business grows, she starts selling lemon in different neighborhoods and even at local events. Right. The stage two is that seeking more money, more capital. She wants to expand into bottled lemonade. Now, instead of people coming in and drinking a cup and disposable cup, etc., now she wants to move a step further, right? And she wants to what? Bottle this lemonade drink. Michaela wants to bottle this lemonade drink for supermarket, for Walmart, for Target, for all these, chain stores around, and then give it African stores, give it to them, and even start a delivery app, right? She think that Michaela thinks that, hey, if I bottle this and then I even have a delivery app, people can even order from the app, and then when they order from the app, I will deliver it to them. So seeking more capital to be able to do this, right? They can bottle this lemonade drinks and then take it to the supermarket, right? Her savings is not going to be enough. I mean, enough for this expansion, right? For this expansion. So she considers what? Raising capital by selling part of her business to what? Investors. Are you guys tagging? Are you guys with me so far? So she considers what? Raising capital by selling part of this lemonade business that, we've all loved it. She's been giving it to us as parents. We love Michaela's, lemonade drink, right? We love it. And now she wants to, expand. But I'll say, hey, enough of taking money from us. Now let's raise money. Let's let other people come in, and let's allow other people to come in and what? Invest in this business, right? So that's going to be the next step over here. So bringing in private investors, right? So Michaela finds 3 investors. Maybe it could be Uncle Chief, Auntie Eunice, Auntie Mamie C, and she brings all these people in, Auntie Abigail, Auntie Rosalind. She talks to all these family friends, angel investors who believe in her vision, right? I set up a meeting for this purpose, and then she talked to all these investors, right? Michaela talk to them and say, oh, I have this, and I think it's going to be good. In return for their funding, I'm going to give them 10% ownership each of Make Money, right? She's going to give them 10%. Michaela promised them. She does very good with her presentation and everything. Say, I'm going to give you guys, I promise you guys, I'm going to give you guys 10% ownership of this business. 10% is good, right? 10% is good. And so here is how she'll prepare for the IPO. After 3 years later, Make Money has grown massively with products in major stores, and thousands of customers love it, right? Now, Michaela wants to raise millions. She has collected, 10,000, 50,000. She's done taking the 20,000 from Auntie Eunice, Uncle Chief, Auntie Abigail, Auntie Sarah. She's taking all this money from them. And now she wants to raise millions. And she knows that her aunties and uncles, maybe they cannot give her that kind of money for now. So because of what she wants to do now, she wants to raise millions and then even expand nationwide so that her product, her lemonade is not just enjoyed in Atlanta alone, but her product is going to be enjoyed in supermarkets and places in Charlotte, in New York, in Seattle, in Washington, D.C., right? In Nashville, in other places, right? Within continental US, right? Michaela wants to raise a lot of money, millions of dollars, not just one, not just two, not just five, not just 10, millions of dollars, right? To take the Make Money, make it a national brand, right? Make it a national brand. So she decided to go through what? An IPO, right? An IPO. So how does she do this, right? She's going to work through a financial advisory firm, right? In going public. She works with a financial advisory firm and underwriters to determine the value of her business, right? And they'll say, well, you've been doing good locally, in your local city, you're doing good. So they decide that Make Money, right? The Michaela's lemonade juice is worth what? $10 million, right? It's worth $10 million with what she has done so far. It's worth $10 million, and release 1 million shares at $10 each, right? $10 each. So when the IPO happens, the public can now buy those shares on the stock exchange, right? $10 per share, right? They release 1 million shares of that because they value the business. Say this business is valued it's worth $10 million, right? And so Now everyone from all over the world, all over the place, it is public, as long as they're allowed to trade or they're allowed to buy, they can now get a share, right, of make money, share from the exchange, right? Now, new shareholders have joined in. Thousands of people everywhere, everyday investors now own pieces of what? Make money. Michaela still owns a large portion and now has access to massive capital to scale their business. Guess what? They brought a lot of money in now. So now she can do exactly what she wanted to do, right? She's raised money, millions of dollars, and now she's going to be a brand, a national brand everywhere, right? She will go to Florida, you go to California, you go to all these states everywhere. You're in Las Vegas, you go to a supermarket, a Walmart, you'll find it over there, right? Because that is what the money that was raised, the capital that was raised, is going to be used for, right? Now, as Make Money continues to grow and become more profitable, now, Michele's lemonade business is now going to start paying dividends, right? Because that's the interesting part, that's the exciting part, right? Going to start paying dividends, start paying people back. Say, hey, here is $1 for you for bringing in $10,000 into my business, right? Here is $5 for you. Here is $100, $200. This dividends, right? Our business is thriving. Our business is doing well, and here we have dividends for you, all our shareholders, right? Right? Those who bought shares early see their investment grow as the stock price of Make Money grows on the stock. As people go to buy, business is doing well, thrive, etc., making more profit. Now, whatever that they bought as appreciated, right? That's appreciated. Now, this is the lesson here. Just like Michele's, lemonade, right? Make money, drink business. Real companies uses the financial market to raise capital as well, to expand operations and share ownership. And that's how we find them on the exchange. That's how we find them over here. Let me share my screen over here. So when you see these companies on the chat, guys, let me know. I just switched screens right now. Let me know that you're able to see my screen. Can you guys see my screen? Okay. So when you see all these companies, let me see in the chat over here. Let me see in the chat. Hey, yes for me. Let me know, everybody, you can see my screen. All right. So this is that same process that, GE Aerospace, uh, PG, they come with a ticker symbol, trading symbol over here, PG, but that is a company called Procter and Gamble Company. That is how they all found themselves here on the exchange, and today we can trade them. Right? I have enormous list, large list here. Honeywell International Inc. Right? They trade on the NASDAQ. The exchange that they trade is over there. You can see over here. I'm highlighting it, NASDAQ. Right? That is how come we can all see them, over here today. Companies like T-Mobile. T-Mobile, right? They trade on the NASDAQ, right? They trade on NASDAQ exchange. You can see over here. That is how today this is the same process, right? I'm saying this is beginner friendly class, right? This training is beginner friendly. That is how they are today. We find them all here. T-Mobile, right? They trade on NASDAQ. Lowe's, we all know Lowe's is an American company here. We found them over here on the exchange. That's how come companies like Union Pacific Corporation, right? Union Pacific Corporation, we found them here. Today we trade them, right? We are investing in whatever we are trading, we're buying stocks, we're doing whatever. That is the same process. They went through the same process, and today they find themselves here. CrowdStrike, right? Holdings. There's a cybersecurity firm, security company. CrowdStrike Holdings Inc., right? They are traded on the NASDAQ exchange, right? Today we find them over here, right? How about Delta Airlines? right? Can you guys see my screen? I want you guys to tell me that you guys are able to see what the list I'm going through over here, right? Can you guys see my screen? Let me see a yes, yes, yes in the comment. Let me know you are tagging. Let me know you guys are following. You guys are with me. I didn't put anybody to sleep, right? You guys are still awake. I didn't put anybody to sleep, guys. Put in a yes, yes for me. Let me know I'm not talking to myself, right? So that's how today we find all these companies here, right? Delta Airlines is right here. You guys can see it, right? We have um, Alaska Air Group Inc. The same process. They started in a small place in the state of Alaska somewhere, and they started growing, growing, growing. Now a brand, right? They are traded on an exchange. They are traded on the NYSE, the New York Stock Exchange. That is where anytime you see this over here, that is the kind of exchange that they are traded on. The Alaska Air Group Inc. Right? That's how companies like U.S. Bank, right? U.S. Bank, they are traded on the New York Stock Exchange, the NYSE. That is how companies like Monster Beverage Corporation, right? They are traded on the NASDAQ, the NASDAQ, Monster Beverage. Have you guys all seen the drink called Monster, right? They started like that, like Michele's lemonade juice, right? That this classic example I've given to you guys. This classic example. They started like that. Today they are all here. Coca-Cola. Wow, wow. NYSE, New York Stock Exchange, right? A company like Coca-Cola is traded on NYSE, right? How about this one? WMT. That's for what? Walmart, right? Walmart, guys. This is Walmart. Walmart is traded on the what? The NYSE. That is the New York Stock Exchange. So the list goes on and on. I have so many lists. I'm going to be sharing this list with you guys because we're going to be doing a lot of exercises and homework, etc. I'll be sharing this list. But Gilead Sciences Inc., right? They are traded on the NASDAQ, right? The NASDAQ Stock Exchange. How about this one? Southern Company, right? The NYSE. How about this one? NVDA. You guys may know this name, NVIDIA, or may have heard of it, right? NVIDIA, right? the 3M company, big company, right? NYSE, right? How about this one? This one's a big one. You guys know this one. AAPL. This is how they trade. They trade by this ticker symbol. AAPL. That's what Apple. We all know Apple phones, Apple laptops. They are traded on the NASDAQ, right? Exchange. That's the exchange that they get traded on. That's the NASDAQ. Apple. How about FDX? FDX, very popular. FedEx, right? Shipping company, logistics company. FedEx, right? They are also traded on the New York Stock Exchange. On the New York Stock Exchange, guys. And then PFE, Pfizer, right? That's New York Stock Exchange as well, right? And then we have WFC, Wells Fargo Bank, Wells Fargo and Company. They are traded on the NYSE. How about this one? You guys might know this one, especially those in America. CVS, right? CVS Health Corporation, right? That is how come all these companies, that's how they founded that's how it started. It starts something like that, very small, like Michele's lemonade, right? You guys love this example that I give you guys, like Michele's lemonade, right? And through gradual process, now they are on big exchanges, right? And then they are traded globally, right? How about this one? This company is very, so very popular. AMZN. Ooh, this is a big one, right? Amazon. Amazon Inc., Amazon Incorporated. They are traded on the NASDAQ, right? The NASDAQ exchange that I mentioned earlier, right? They are traded on the NASDAQ. Amazon, that's a big one, right? How about V, the ticker symbol V? That's Visa. Do we all have a Visa card that we use? Debit card, credit card, Visa. They are traded on the New York Stock Exchange, right? New York Stock Exchange. How about AMGN? AMGN. They also traded on the NASDAQ as well. So there are a lot of companies. I have a lot of companies on my watch list. I'll be sharing this one. This is Schwab, right? Charles Schwab Bank, Charles Schwab Inc. Corporation. They are traded on the New York Stock Exchange, guys. So the list goes on and on and on and on. DXY, MU, Micron, Lear, Lyric Corporation, ABNB. This one's a very popular one as well. ABNB, Airbnb, right? Airbnb is traded where? On the NASDAQ. Small gentlemen, small guys. These guys started it just like that. Just like Michaela's make lemonade, lemonade juice, right? Lemonade juice. Airbnb, today they are traded on the NASDAQ, right? Very popular. Everybody knows Airbnb now, right? But they've raised money. They came to the market just like the same process I walk you guys through right now. And today they've raised a lot of millions of dollars, right? They have a huge market cap. PM, Philip Morris International, Dash, DoorDash. If you are eating, you are ordering food on DoorDash here in America, they are also traded on what? NASDAQ. NASDAQ. How about UPS, right? United Parcel Service Incorporated. They also traded on the NYSE, NYSE, NYSE. How about ORCL, Oracle Corporation? There's a big one, right? They also traded on the NYSE, NYSE. NYSE, NYSE. So there's a lot of companies. How about this one? This one is also a very big one. GOOGL, Alphabet Inc. The trade on NASDAQ, or otherwise known as Google, right? This is Google, right? You guys know Google. You guys are familiar with them. So there's a lot of companies. JPM, that's JP Morgan Chase Bank, right? How about TSLA? That's Tesla, right? That's traded on the NASDAQ. NASDAQ, right? All right, now let's come back to our slide. How about, let me finish this one. This one is a very popular company as well. MCD. MCD is McDonald's, right? McDonald's, right? We all love McDonald's, but that's the same process, right? Hey guys, we're not going to miss anything. This class, baby step, we'll get everything. We'll understand the market like not like nobody's business, right? We'll understand this market, right? All right. Now let's switch back to the slides and let's keep going, right? Let's keep going. All right. Let me know that you guys can see the slides one more time because I just switched back. Let me see a yes, yes, yes in the comment section or chat session, and then let's keep going. Let's rock and roll. Let's rock and roll. All right, I see yes, yes. So that means you guys are tagging, you guys are tracking with me. All right, let's keep going. So just like Michaela's make money juice, right? She's going to raise capital for expansion operation and she'll share ownership, and then the business is going to find itself, right, on the stock market, maybe with a ticker symbol, maybe MMA, right? It's going to be MMA, it's going to be make money. That's how people will trade it, right? Michaela's lemonade business, right? Right. So investors benefit by buying into great companies and potentially growing their wealth over time. Potentially growing their wealth over time. All right. Now, when you look at the market, as I show you guys, the market, as I brought it up, it comprises of sectors, right? It comprises of sectors, made up of sectors, right? Sectors, right? So what's a sector? There are 11 sectors out there. But let's get some definition now. So a sector is a broad grouping of companies that operate in the same segment of the economy, right? Sectors help investors and analysts understand how parts of the market are performing, right, relative to each other, and provide a framework for diversification. We're not going to be ignorant, right? We're not going to be, if something is happening somewhere, we know that it's going to affect how we trade. It might impact us a little bit, right? And so we need to know each sector contains various industries with companies offering similar goods and services, right? So when analyzing the market, sectors provide valuable insight, right, into economic cycles, investor sentiment, and then also trends as well. Also trends as well. All right, now let's look at the 11 sectors that are available, accessible, that are on the market, right? That are on the market. There are 11 sectors out there. 11 sectors out there. So the first one is going to be information technology, right? There are a lot of tech companies out there, right? So the tech companies, they focus on we focus on companies that are hardware, software, IT services. They all fall into the category of information technology, or tech for short, right? So companies like Apple, they fall into that category. Companies like Microsoft in the same category, right? Nvidia in the same category. Intel, Cisco Systems, they all fall in the same category, the tech or information technology, right? Now, the tech industry, of course, it drives innovation, response to consumer and enterprise, demand for digital tools, right? So that is the first sector. When we look at the market, and we have to be aware of this, and people have different appetites for different things, right? Even not just buying stocks, but even how they trade. They want to trade different sectors because they know that, some of the sectors are great moving, and, they can make profit. They will buy somewhere here, sell somewhere there, with their trade, right? So the sectors are very important. All right. The second sector here is healthcare, right? A lot of the companies that are listed on the market, right, on the exchanges around the world, you will see healthcare as well. Healthcare, the focus is on pharmaceutical companies, biotechnology companies, medical devices companies, and other healthcare services or allied services within the healthcare ecosystem, right? Healthcare ecosystem. So by this, what do we mean? What kind of companies are we looking at? Companies like Johnson and Johnson, J&J, right? Pfizer, United Health Group, Merck, Abbott, Laboratories, right? They are all in the what? Healthcare sector. Healthcare sector, right? Healthcare sector. Of course, defensively, the healthcare sector is positioned to position sector that performs, steadily, regardless of the economy. People go into this because they don't, they have this belief that, it's very stable, very steady. They don't move a lot. That is a healthcare, sector. And then the next sector over here is the financial sector, right? When we are trading, there are financial sector that we're going to trade. These are foundational stuff that you guys have to know, right? So financial sector, we are talking about banks, right? They are in the financial sector. Investment firms, they are also in the financial sector. Insurance, right? Insurance business, they are also in the financial sector. Real estate, they are also in the financial sectors, right? Sector. So companies like JP Morgan Chase Bank, they're in the financial sector. Bank of America, right? Wells Fargo, Goldman Sachs, Citibank, they play key role. Key to capital flow, monetary policies, sensitive to interest rate changes, etc. You know, if you're trading anything with banks, etc., stocks on banks, on financial institutions, you know, days that the Fed chairman, he's called Powell, something Powell, Jerome Powell is about to speak. You got to be watchful, right? Anytime you are trading some of these banks, their stocks on the market, you are trading them. Um, things like interest rates affect, can impact on how they look like, their market formation out there. And so you need to know, right? So that is a financial sector, guys. That is the financial sector. All right. Now we have the consumer discretionary. Consumer discretionary. So we have two type of consumer sectors. You have the consumer discretionary. So non-essential goods and services like cars, right? Luxury items and retail, they all come under the consumer discretionary. So companies like Amazon, you're shopping on Amazon, Tesla, Nike, Starbucks, Home Depot, they are all in there. These companies, they perform well during economic growth, and they are sort of tied to consumer confidence. Companies trust them, right? Companies trust them. When you buy a Nike shoe, when you buy Starbucks coffee, right? Amazon product, they trust them, right? That they will deliver. So that is a consumer discretionary. And then we have consumer staples, right? There's another sector as well. We have the consumer staple. as well. So here we're talking about essential products such as food, right? Food, beverages, drinks, household goods, right? So big players in the consumer staples. We're talking about Procter and Gamble, right? All the things that you use in the morning, some of them falls in there. The toothpastes and all those things, like the things that are used on daily basis, right? Coca-Cola, Walmart, Pepsi, Colgate, Palmolive, they are all in there, right? This is also a very defensive sector, usually very stable in any market condition, right? We cannot say that the market is going down, the market is crashing, so we're not going to brush our teeth, right? We cannot say that, the market is red. Trump is speaking, the market is red, so we're not going to wash our hands. We're not going to use liquid soap. We're not going to use, detergent. We're not going to wash our laundry, no, right? They're very defensive sector, right? Usually very stable in any market condition. People prefer to trade some of these sectors, right? Because it doesn't matter. Whatever happens, people are going to buy some of these products, People love their Pepsi Coke, right? They drink it every day, right? It doesn't matter. You know, it can be worst day ever in the back, but people are still going to find a way to drink their Coke, right? Their Pepsi, right? People are going to go, they will still go to Walmart, right? And shop. So this is a very defensive sector, right? Very stable in any market condition, very stable in any market condition. So that's the consumer staples. And then we have the energy sector, right? We have the energy sector. We have the energy sector. We have so many energy organizations. I even mentioned some of them on the chat not too long ago. So energy sector, we talk about oil, we're talking about gas, we're talking about renewable energy, solar, we're talking about solar here, and all other types of renewable energy stuff over here. So we have companies like ExxonMobil, Chevron, ConocoPhillips, Schlumberger, Nest Era Energy, and so many of them. Shell, you guys know all these energy companies out there. I put some of the images over here. Duke Energy, Swiss Power, Sterling, Statoil, SP Group, PTT, E.ON, AGL. These are all energy focused in sectors, right? Companies. And that's how we trade. These sectors, of course, influences inflation and global trade tied to commodity prices, right? So when you're trading things like some of the currencies, even for example, Australian dollar, they are backed by commodities. Some other market, they are backed by, some energy, oil, gas, etc., right? When you go to other markets, Kuwait, Qatar, Dubai, you go to all these places, UAE, other markets around the world, they have different things that back their, some of the companies that are out there, right? Some of the companies that are out there. They influences inflation and global trade at a different level. They influences inflation and global trade at a different level. When we say that a gallon of oil or a gas, the price has changed. It affects everything. If you're from where I come from, right, Ghana, it can affect even everything. Even watching on the street the next day morning, when we say that, if you're from where I come from, the nation, beautiful nation, Ghana, when they say, oh, price of, petrol has changed the next day morning, trust me, how's that cocoa seller might even change, the how's that cocoa seller, how's that cocoa seller, can you guys hear me or not? Can you guys hear me? Am I audible? Go ahead and put in the comment section. I see somebody say that I can't hear you. Okay, all right. You guys can hear me. All right. So, energy sector. The energy sector influences inflation, right? So when things are changing, you got to be mindful. If you are trading energy, product, if you are trading energy product, you got to know what is happening, right? I trade crude oil all the time. I trade crude oil all the time, so I got to be aware of this, right? I got to be aware of this, right? If something is happening in the oil, gas, renewable energy, I got to be aware of this, right? I got to be aware of this. The influences of inflation and global trade, tied to commodity prices. So energy is also another over here, guys. Baby steps. You guys will get this. There's not going to be ambiguity. When you start trading, you guys will understand this. No, this is why you said this. This is why you were saying this. All right. Then we have the industrials, right? Industrials. Industrials, we are talking about manufacturing, we're talking about construction here, we're talking about aerospace here, and then logistics, right? With the industrials over here. So companies like Boeing, right? The aircraft company, the airplane company, right? Aircraft company, Boeing, General Electric, Caterpillar, right? Union Pacific, 3M. They are all in what? Industrials, right? They are all in industrials. Guess what? It's sensitive to economic cycles, vital for infrastructure and development, right? Vital for infrastructure and development, right, guys? Development. All right. So moving on, That's industrials. Utilities, right? And then we have utility sectors, right? Utility sector, talk about electricity, we talk about gas here, and then water services, right? So water services, electricity, gas, they are all in there. They're all in the same sector. So utilities, right? So companies like Duke Energy, Dominion Energy, Exelon, American Electric Power, Southern Company, and so many others. You can name some of them in your own local area. If you're in Ghana, maybe ECG, right? They have thousands of containers missing. Incredible. If you're in the UK or wherever you find yourself, there are a lot of energy utility companies as well. This is also a very defensive sector as well, very stable, stable revenues from essential services. It doesn't matter what everybody is doing, we're still going to need electricity, right? We're still going to need light. We have to turn the light on, right? So utility companies, they're also a big one. When you're trading them, you got to know what you are trading, right? And then we have, the materials, right? We have the materials. We have the materials as well. We have the materials. So we have, focus on raw materials, chemicals, metals, and mining, right? And mining, right? And mining. Companies like Dow Inc., Newmont Corporation, Freeport, Lindy, etc. They are all in the what? Materials sector of the market, right? Material sector of the market. And then they all tied to industrial demand and global construction cycle as well, right? And then real estate, right? Maybe the last sector, I believe so, is the real estate. No, maybe one more. The real estate sector is also a very huge one. Real estate investment trust, the REIT, and then property development, they are all in there. So American Tower Corporation, AMT, Prologis, PLD, Simon Property Group, SPG, Equity Residential, EQR, Public Storage, PSA, they're all in the real estate sector, right? The real estate sector. The real estate sector. So that is what these guys are in there. These guys are in there. All right. And then the last one is the communication services. Communication services. Communication services. Communication services. All right, communication services. So, communication services, we're talking about media, we're talking about entertainment, we're talking about telecommunications, companies like Alphabet, Google, Meta, that's Meta, Facebook, Netflix, Verizon, AT&T, T-Mobile. They're all in there, right? They are all in here. They support global connectivity and content consumption trends, right? Very important company. Facebook, for instance, the stock price has skyrocketed, for a few months, very up there, right? They are doing very well. They're doing very well. Google, Alphabet company, that's Google. There's the parent company called Alphabet Inc. That's Google. Verizon, AT&T, these are all great companies. People love them, right? Hey, like I said, people have different appetites, right? The appetite drives what they buy, they invest, they trade, they do all sort of things, right? So when you look at all these companies, or look at all these sectors, market, etc., they fall in some of these categories over here. Some of them are very large companies. If you're buying a stock, if you're investing, sometimes it requires a good amount of money, to be able to do that. Especially if the broker that you're using to trade or to invest or to do whatever, they don't offer good leverage, right? They offer good leverage. So you have mega cap companies, right? Mega cap. That means companies that with their mega, with a valuation over 300 billion. There are not a whole lot of them out there. There are few, right? And then we have large. That means over 10 billion, right? Over 10 billion. And we have mid cap. That means from $2 to $10 billion as well. Then we have small. We have small 300 million to 2 billion, right? And we have micro. Micro means from 50 to 300 million. I hope you guys are taking notes, guys. We have nano below 50 million, right? Below 50 million as well. All right. So, if you're trading, you look at any sector, looking at any market, you got to know the market cap. Some people trade some of these things because of, the market cap, they just want to go big, right? Um, this is how the sectors tied into the market, structure, right? The sectors that I call out, the industrial, the communication, the energy, and all the others that I've called out, each sector responds different to the economic conditions, interest rate, inflation, and global events differently, right? They all do that. They all behave very different. By observing which sector are performing well, investors can predict market trends. If you want to trade, if you want to be like a momentum trader, you're trading with what is really moving. You got to be looking at some of these things, right? Sector rotation is a strategy where traders move investment across sectors based on the economic cycle, right? As I talk about some of the sectors, and some of them they have different cycles, etc. A lot of people want to move, their trade into some of these areas. The indexes, right? We have the indexes. Indexes like the S&P 500 are made up of companies from various sectors, right? Helping investors gain diversified view of the overall market. When people are trading the S&P, they're trading the Dow, they trade the NASDAQ, they're trading the Russell, they're trading all of this, out there. The reason why they trade is that some of these indexes like the S&P 500, for instance, that we trade, right? It is a makeup of some like an aggregate, a combination of some of these sectors, right? So people love the S&P. Why? Because it is diversified, right? That is the reason why people love it. Say, I'm trading the S&P, I'm trading the Dow, I'm trading the NASDAQ, right? Because it's diversified. You may have energy, you may have maybe materials, you may have other sectors that if you just mentioned, you may have them in there in one basket to trade, right? That's why people love to trade, things like that. But you can trade specific companies, based off on your appetite as well, right? If you love, the sector that call out, and so like Delta Airline, you can be trading Delta, on any day, anytime, you can be trading United Airline any day, anytime, right? If that's what you love, right? Understanding sectors allow traders to capitalize on growth in specific industries and reduce risks by spreading, well, your choices, your investments, right? Essentially, the choices that are out there. You have a plethora of choices, right? It's a bouquet of things to enjoy. All right, let's take a quick 5 minutes break. Let's take a quick 5 minutes break, guys. Let me put a timer over here. Let's take a quick 5 minutes break, and then we will continue. Okay, all right. So, it has been an interesting first half session already. All right, so let's talk about market capitalization. All right, market capitalization. So, you guys will hear me say market cap, market cap, market cap. This company has a market cap, right? Market cap, market cap. You guys will hear me say that a lot, right? You guys are going to hear me say that frequently. Market cap, right? You guys will hear me say market cap, right? When you hear that, don't be afraid. It is nothing, but essentially, it is how you look at any company, right? Like Apple, like Boeing, like McDonald's. They have a market cap of this, they have a market cap of that, right? So, market cap really is the total, right? The total value of a company's outstanding shares, right? It is calculated by multiplying the stock price by the number of outstanding shares, right? By the number of outstanding shares. So, as an example, if XYZ company, if XYZ company has 10 million shares and each share is worth $20, right? Yeah, XYZ company has 10 million shares and each share is worth $20. Then its market cap is a 10 million multiplied by the $20. So the market cap, oh, so the and that will equal to what? $200 million, right? $200 million. So this will make SYZ a small cap company, right? Because they fall under $200 million by how I broke it down, right, for you guys, right? So it's a small cap company, a mid cap company, a large cap company, right? That means their number of outstanding shares multiplied by what? The share price, right? Or stock price, right? That will let us know their market cap or their market capitalization, right? So when you hear Apple, Tesla's market cap is this. When you hear, McDonald's market cap is this. When you hear UPS, DoorDash, their market cap is this. When you hear Airbnb, right? Airbnb, their market cap, right, is this. What that simply means is that when you take a look at, that company, the outstanding shares multiplied by what? Their share or their stock price. That's how you arrive by that, right? So when a company's market cap is over 10 billion and above, like Apple, Microsoft, etc., that means the outstanding shares multiplied by what? The um the weight of the share, right? Guys, very simple, very straightforward, right? That is market capitalization, market capitalization. All right. So that's one thing that you guys have to understand. I'm trying to get some few terminologies here, as we get into trading proper, right? And as we go into trading, you guys will hear things like supply and demand. Supply and demand. We'll go into supply and demand proper, but this is just tidbits, right? Supply and demand, right? You know, Supply and demand. The market, the stock prices are driven by the balance between buyers, demand, and sellers, supply, right? Stock prices, they are heavily, they are heavily driven. They are heavily driven by what? The balance, right? The balance between buyers, that's the demand, and sellers, supply, right? For example, if everyone wants to buy Tesla shares because of a new product launch, right? Everybody buying Cybertruck, they buy a Model Y, they buy a Model 3, they buy all this other Model X, they buy all these things because of a new product launch. There's going to be a high demand, right? There's going to be a high demand for it, and fewer people will want to sell, right? So that will cause what? A low supply, because everybody was trying to buy because of the excitement, the euphoria, and all the news and going on with the new product lines, right? If Tesla is coming out with robo taxi, right? Robo taxi, a cars cars that will start, driving by itself, autonomous taxi, autonomous car. The car can drive by itself, right? Nobody's going to sit in and drive. You request for a ride, the car will pull up. Nobody's in. You sit in. The car will take you to wherever you're going, right? Robo taxi. There's going to be a lot of people chasing after that, going after that, right? Demand is going to be high, and so supply is going to be what? Low, right? If bad news hits and many investors sell their Tesla shares, there's going to be what? High supply as well. But few want to what? Buy. That's low demand. The price will what? Will drop. So here, the supply demand we're talking about here is just, the kind of different price actions that happen on the market. When it's demand, the supply, different people, dictating different things based upon their appetite, where they want to sell, they want to buy, based upon market sentiments and what is happening, right? There are a lot of factors that move the market, right? So there's going to be supply, there's going to be demand. We just have to be aware of it, right? When you look at the market, let me bring a chart here, quick here, and even go through this. Let me share this here. When you look at the market, I can share with you guys where there was a supply, where there was a demand. Let me know, guys, when you guys are able to see the chart. Let me see a yes in the comment section that you guys can see it. You can see the chart. Yes. Can you guys see? Yes. Okay. All right. Great. So what do you guys see over here? Okay, let me use Tesla, because there has been a lot of things going on with Elon. So let me search for Tesla, and let me search for it. If TS, that's Tesla over here. Okay, let me use daily so that the candles can be big, so you guys can see what is happening, right? Or even weekly, so I can see big candles. All right, so let me turn off this volume indicator over here. Okay, all right. So you guys can see over here on this chart, right? You guys can see over here on this chart. There are green candles, there are red candles all over the place, right? All right. Now, anytime you see a red candle, what I want you guys to understand is that there's a selling going on, right? There are sellers taking over, right? They've invaded the market. Sellers, they've invaded the market. They're selling. So the price is coming down, right? You guys can see over here. We will do a proper chart analysis, but today's not day, might not be the day we're going to do this. But over here, as you guys can see from my right side, let me put a line over here. At least, okay, let me even use this one. Let me increase, so you guys can see it over here. Okay, all right. So over here, right over here, if you guys look to the right side of it, this side, all this side over here is a price over here, right? You guys look at the price. So 461, right? 461 was how much it was selling for by a stock. The stock price of Tesla went all the way to what? 461. Guess where the current price is right now? Let me put a big mark over here so you guys will know where the market closed. 239. So it closed yesterday around 5 p.m. yesterday, 4:30 p.m. Yesterday. The market closed with Tesla stocks closing at what? $239, right? But it was right here, 439. When was this? This was December 24th. Tesla stocks went all the way up like that. Even January 13th, it was still up there, 440, was still up. Even days ago, right? February 3rd, it was still 385. So the price was still up, right? It was still up. But right now, look at where it is right now, 239, right? March, today is what? April 5th, right? So we are looking. Okay, so guys, here is one thing that let me do a day chart so that this will I can drive home the point I'm trying to make here. Well, all right. So yesterday, this is a daily. I switched my chart to the daily chart. Right. There are different time frames over here. We have the weekly, monthly, weekly, daily, 4 hour, 2 hour, 1 hour, 30. We will get into all these things proper. I will help you guys set up all these things in your chat. Everybody will bring their chat up to make sure that you guys are all set up, properly. I'll do that. But look at it. Yesterday, the market closed over here daily. So April 4th, 2025, by the time the market closed yesterday, 239. But over here, you can see, it was all the way up, right? But this is what I'm talking about, supply and demand. And it is driven by so many things, right? Like for instance, right now, Elon, there's a lot of news with Donald Trump and different things, and there's a hate going on, a lot of things going on in the market right now. But essentially, that's how the market is. It will definitely bounce back again, right? People cannot do this forever, right? They cannot hate on Elon, forever. It's not going to be a permanent thing, right? So this is a temporary thing. It's a temporary setback, right? So stock prices are driven just like that. You'll be trading, right? You'll be trading, and then the price will be coming down. Prices coming down. Prices coming down based off on different market sentiment and different things. Like as you guys can see, this one was. Let me see if I can get it. Wednesday. Wednesday was crazy. Wednesday there was huge sellings, going on. You know, there's a lot of selling, that was going on Wednesday, because Trump was speaking on Wednesday. There was a lot of things, So anytime you see a green, right? Let me bring it back again as well, because I want to talk about the buying and selling. Not just the sell alone, but let me also talk about the buying as well. When you see a green, that means people are also what? Buying as well, right? I know I only mentioned the selling, right? So the green, anytime you see a green too, the green candles as well, that means people are buying as well, right? They are buying. If you see this green, like here, the market, I think there was a gap. The market even closed here, and then by Monday morning, open 9:30 a.m., open from here at a different price. Can you imagine? The market on Friday, that was March 25th, the closing price was 249, and then when the market opened the following Monday, it opened at 256, right? There was a huge gap. That means demand shot up over here. So anytime you see the green candles as well, that tells a story. Every candle that you see over here, there is a story behind it, right? I want you guys to get to it. We'll get to the candlesticks, guys. Hey, family, we will get to the anatomy of the candlesticks. We will get to, do a proper analysis, a deep dive into all these candlesticks, the shape, how it looks like, and what you must be thinking, what should be coming to your head when you see a shape like that. There's so many things, different candlestick shapes, etc. We'll get into that. We'll get into that very soon. All right. But here, I just want you to understand the supply, the demand. What is going on? Market reaction, over here. As people are buying, people are selling, it goes all the way up, it's coming all the way down. There are sellers market, buyers market. I want you guys to understand that. All right. Now let's come back here to this slide. All right. So that stock price are driven by what? The balance between what? Buyers, that's a demand, right? Every time we hear buyers, we talk about demand over here. Every time you hear sellers, talking about supply over here, right? Supply. All right. Good job. All right. Moving on. There's something that you guys also have to be familiar with. There's something called bulls market and then the bears market, right? As you guys can see from the picture over here, there is a bull picture over there, and there's a bear market, right? You guys will hear this a lot, right? As we go into trading proper. You guys will hear it's a bullish market today. It's a bearish market today, right? You guys will understand the whole bullish market. That means prices are rising or expected to rise. It's a bullish market. That means it's going up. The green, right? Green, it's going up. And let me use this animals over here, symbols over here. You see the bear. The bear is it when the bear wants to attack, its nose is pointed down. It attacks, like that, pointing down. And then the bull, its horns and everything is up, so that's up. It goes long. So that's why they use the bull and then the bear as different reactions or price actions to the market, right? So when you hear bulls market, it means prices are rising, they're expected to rise, there's high investor confidence, things are expected to go up long. So we want to buy so that we'll make profit, right? If we say it's a bear market, right? If you hear a bear market, it means what? Prices are falling or are expected to fall, right? Prices are falling or expected to fall. Investors are cautious or selling off, right? When you hear this, that's what you will hear. It's a bullish market, bullish. You guys will hear this. You guys are invested professional today, so you guys will begin to use the term. As a matter of fact, very soon, when you guys are talking to me, you guys will be saying, the market is very bullish today. The market is very bullish. I know. Oh, yeah, 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 yeah. Very bullish. That means very bullish. There's demand. It's going up. Price is going up in green. And sometimes, other times you guys will tell me, the market is very bearish, bearish. When I say market is bearish, that means the market is what? Dropping. The seller's market, the supply here. See, from 2009 to early 2000, the US stock market was in bull's market, right? Bull market with consistent growth. The market has been I've been in a steady. It has been very steady, I must say, very steady from that time to 2020 before COVID-19 hit, and then when COVID-19 hit, it briefly turned into what a bearish market. And this is not necessarily about a long period of time or something. Even daily, this thing can happen on daily basis as well. It can be bullish, it can be bearish, depending on what is going on, right? But hey, as traders, we don't care about, whatever that's happening on the market, right? We do not care about whatever that's happening, whether it's a bullish or bearish, we don't care. Typically, it's people who are buying stocks and holding. They will be the ones that will be crying, right? Like when Trump was speaking on Wednesday, people that have bought stocks and they are hoping that the prices or the stock price of these stocks that they've bought goes up or appreciate in value. They'll be crying because when Trump was speaking, things were crashing down, coming down, right? So that means the value of their stock price, the value of the stock is coming down, right? If it was $200, some of them are coming to 120, 150. So that means it's reducing in value, right? But we don't care as traders. Why? What is the reason why we don't care? Because we make money when the market is going down. When the market is going down, what do? We sell. We look for some opportunity in the market and sell as the market is going down. So we flow with it, we ride with it as it's going down, right? And then when the market is going up to, what do? We buy, demand. We buy and ride with it as it's going up. Even, when the market is moving sideways too, we can even, there's a strategy to also trade sideways in a range market. Sideways. That means the market is consolidating a certain kind of price. There are equal buyers and equal sellers within a certain time. So you will see this a lot. I will show you guys some of this chart where it's like a range market, as a range market or sideways market. That means the market is neither going up or coming down, right? It's not going up, coming down. It's in sideways, right? Sideways market. Gold for some time yesterday was in sideways. In the morning, it was all the way up, right? In the morning, so and then later in the afternoon, let me check if I can bring that up here for emphasis sake. later in the afternoon, then it was all in sideways. It was not moving anywhere. It's not going anywhere. So you can't trade it, right? Sideways. This is a good one. Uh, Gold yesterday. Yeah, let me bring this up so you guys can see this. Oh man, gold. Yesterday, man, I missed an opportunity to take a trade. But that's how the market is. When you see something, you go ahead and take it. If you don't take it, you're going to lose it, right? Let me bring my screen up here to show you guys. Let me know if you guys are able to see my chart. Can you guys see my chart over here? Can you guys see my chat over here? Let me see it. Yes, yes, yes in the comment section. Guys, this trading is yes, I see. Yes, I can hear. Yes, I'm here. Very interactive, right? Very interactive. So respond that you guys can see. I know you guys are here. You guys are tracking with me. All right. Okay. So yesterday, in the morning at somewhere around 7 a.m., I saw this trade, over here, and I marked it up. It was 7 a.m. I saw this zone over here around 7 a.m. And I mark it that no, there is a lot of things happening here. So this is a potential supply zone, right? Supply zone. There's going to be selling over here. I can see that there are sellers over here waiting, right? When the market make a very strong move like this, right? A bearish move, right? This is a classic example of a bearish move like that, right? Selling move like this, as you guys can see the red big candle over here. Right, let me maximize it so you guys can see this. Get over here. Very bearish, right? This was done on Thursday. So on Friday morning, before I was going to drop the kids off for school, I was doing some analysis before 7 a.m. I was around 6:55, 6:50. I was looking at the market and I said, this zone, it looks very good. It's quality, right? So I look at the 30 minutes time frame. I'm like, God, this looks good. The market is likely going to come back to this zone, right? And guess what the market did? I left. When I was leaving, it was already 7. I have to go and drop the kids off around that time. I left home, and when I came back at 7 a.m., the market came back right into this zone, this red zone that I drew up, right? This red zone that I drew up over here came right in, and guess what? And and then sold back down, right? You guys can see came back down. That means what? Profit. I left a lot of profit on the table. This is almost about this is about 9 to 1, guys. 9 to 1. This is incredible. When I came back, I'm like, God, why did I should have taken it before leaving, right? So at 7 a.m., you guys can see the timeline, as I put the mouse over there, it came in around exactly 7 a.m. When I was looking at it, I'm like, this is going to hit right now. As I drew it in my gold market, I was like, I miss it. If I've taken a trade, right? If I've taken a trade with this, if I've taken a trade over here and I've taken maybe 2 contracts with this, right? 2 contracts, which is going to cost me $226. If I'm taking 2 contracts with this, even 2 contracts alone, I want you guys to look at the profit, as it came down here, that's about $2,128. It came all the way down here. If I've taken maybe 5 contracts, and typically I would have done that, because I love gold. I know gold move a lot. When I came back, I'm like, God, I missed this. I missed this. If I'm taking 5 contracts, right, and Rick saying $565, it would have been in profit $5,320, in profit just like that, right? But let me show you the consolidation that I want to show you, right? In a range market, but in the course of the day, I realized that it was in a range market, right? In a range market. I mean, it's going nowhere. It's not showing any sign of going up or coming down or whatever. It is just in consolidation, right? So you guys can see over here, it's in a sideways. That's what we call sideways. Can you guys see over here? Let me try and put a rectangle box over here. Uh, here. You guys can see over here. Here, it's in sideways market, right? When something moves up, you will get to know it's moved up, right? It's in as a matter of fact, there are few consolidation going on over here, right? There are few consolidation over here. So you guys can see that it was consolidating. It was why did I delete my zone? Um, it was consolidated over here. You guys can see that it was consolidated over here, and then they move up a little bit, and then it consolidated also over here, and then dropped down a little bit, and then consolidated all over this here, right? Sideways market, right? Sideways market, and then move up a little bit over here, and then consolidated also over here. Can you guys see that, right? Can you guys see the consolidation? I want you guys to, see this, right? Consolidation. That means it's going nowhere, right? Going nowhere. Can you guys see that? Let me see the comments or chat session. Yes, yes, yes. You guys can see the sideways. This is what we call sideways, right? That means it's not going anywhere. It's just equal buyers, equal sellers, equal buyers, equal sellers. If you put it into a rectangle box, you guys will see this over here. Equal buyers, equal sellers, equal buyers, equal sellers, right? Can you guys see that? This is what we call sideways, guys. Sideways, sideways, right? That means it's going nowhere, right? Going nowhere. It's going nowhere. When there are equal buyers and equal sellers, that's what it looks like. But guys, there are opportunities like that. Opportunities like that. Like the one that I just showed you guys in my 30 minutes time frame. I saw this, supply zone in the morning, like 7 a.m. I'm like, this price is likely to come back here, and by 7 o'clock, it already hit. And then it came all the way down, dropped all the way down to the side. So that's selling, right? That's selling over here. So as I was sharing to you guys, I was talking about, we don't care whether it is a bearish market like this one. This one's a bearish, right? Coming down, selling, bearish. If it's going up like the green, that is what a bullish market, right? You guys get it. This is bullish. The market is bullish, right? That means there is this bullish. It's looking bullish right now. It's looking bearish and it's coming down, right? All right. You guys get it now. You guys are all professional traders now, right? You guys are now professional traders. So bearish and bullish market. We don't care, like I'm saying, right? We don't care which side it goes. If the market is coming down, we short it. If the market is likely to go up, what? We go bullish as well. That means what? We buy, right? We buy. That's what it means. So bulls versus bear market, right? You guys get it now. All right, moving on. There is something called volatility, right? Volatility, 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 right? Volatility. Comes called something called volatility. Volatility is basically the degree of variation in a stock's price over time, right? The degree of variation in a stock price, as you have a picture over here to indicate to you guys, to show you guys, it's going down, it's coming up, it's going down, it's coming up. As you guys can see, the red going down, and then the green, it's coming up, right? The degree of variation in stock price over time, high volatility is equals to what? High movement up and down. And whenever you hear there's high volatility, that means there's a high movement, right? Whether going up or coming down, whether going up or what? Coming down. So a stable stock like Coca-Cola does not move a lot, right? A stable stock, if you're trading Coca-Cola, you don't expect to be making a lot of profit because it does not move. It does not move a lot. The ATR, the average true range, or the movement, it's not a lot, right? A stable stock like Coca-Cola moves slowly, right? So it's what? Low volatility, right? We will classify that as Coca-Cola as what? A low volatility, right? Low volatility, right? A tech startup or cryptocurrency might rise 20% in a day. Coca-Cola might not even move maybe 5%. It might not even move, not even that, right? But, a tech startup or cryptocurrency like, Tesla. Tesla, there's a lot of movement in a day, right? There's a lot of movement in a day for a company like Tesla, right? A Tesla or cryptocurrency might move 20% in a day and drop 15% the next. We call that high volatility. high volatility. So volatile asset can offer more opportunity, but also carry high risks as well, right? You buy this right now, and then the next second is dropping, right? Very volatile, very volatile. So you're buying something or you sell something, the very second is rising up again, right? You know, volatile market, right? Volatile market. So volatility, volatility. All right. Now, another thing that you guys have to also keep in mind is something we call liquidity, right? Liquidity, liquidity, liquidity. Are you guys with me so far? Let me see in the chat comment section. Yes, yes, yes. Let me know you guys are with me so far. Let me see in the chat box. Yes, 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 yes. To let me know that you guys are with me so far. Put it in. Yes, 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 yes. Let me know you guys are with me. Yes, yes. I want to see from everybody. Yes, yes. You guys are with me. I know you guys are still. All right. So liquidity, right? Liquidity. Liquidity simply means what? How easily you can buy or sell an asset without affecting its price, right? How easily you can buy or what? Sell an asset without affecting its price. So for example, Apple stock is highly liquid, right? Apple stock is what? Highly liquid. That means what? You can buy or sell it instantly at nearly the same price, right? Very liquid, very, very liquid. A real painting or small market company stock might take time to sell or may sell for less, because what? There's what? Low liquidity, right? This is the reason why there are some currency pairs that, we don't necessarily trade, right? We don't trade some currency pairs. Why? Because what? There is what? Low liquidity. You buy something and it might never move, right? There's low liquidity. Not a lot of people are buying the same thing, right? Or trading the same, asset or security or currency, right? You don't have a lot of people trading the same thing. But with something like Apple stock, people are trading it. Yeah, a lot of people are trading it daily, right? So can buy, sell, buy, sell. There's a lot of movement going on. Liquidity is high, right? Liquidity is high, right? There are currency pairs that there's a lot of liquidity, like the Euro USD, the Euro USD, very high liquidity, right? The Euro JPY, there's liquidity in there. The USD JPY, liquidity in there. GBP USD, Great Britain Pound USD, there's liquidity. GBP JPY, there's liquidity. GBP Euro, liquidity, right? There's so many of them, right? AUD USD, Australian dollar, United States dollar, there's liquidity. Some of these currencies, right? Liquidity. So how easily you can buy and sell asset without affecting the price, right? Liquidity is there, right? Very liquid, very liquid, highly liquid. You can buy, sell instantly at nearly the same price. Very liquid, right? Very liquid. Liquidity is there. So that is liquidity over here. Very liquid. All right. Dividends. We kind of mentioned it, in a passing. Uh, Dividends, a portion of company's profit paid to shareholders, usually quarterly. When you are trading, we have earnings report and some of these things, some of the reports coming out, and you got to be aware of it, right? And some of these things happen quarterly, right? They happen quarterly. Example is if Coca-Cola pays 1.50 per share in annual dividends, you own 100 shares. That means you earn 1.50, right? Times 100. That means $150 per year. And this is a passive income, right? If you're trading or investing in different, product assets, securities, or whatever, and they're paying in dividends, this is how much you'll be calculating it, right? So if they pay $1.50, right? If they pay $1.50 per share in annual dividends, you just have to multiply that by the number of shares that you have, and then you get to know the kind of income, passive income that you will be earning, right? Dividends. You know, some dividends and some of these reports, we need to be aware of it as you trade because it will affect volatility as well. on the market. We have something we call earnings report and financial statement, right? If Tesla's earnings report is coming out, guys, you got to be aware of it, right? You got to be aware of it. If Apple's earnings report is coming out this week, you will see it in TradingView and other platforms that Apple's maybe earnings report is coming out. You have to be aware of this. Companies release earnings report quarterly showing their revenue, expenses, their profit, and outlook. This helps investors assess performance, right? So this tells a story if we should be trading this, buying this, selling this, whatever, based off on their performances, right? If Amazon, right? If Amazon, as an example, guys, if Amazon reports higher than expected profit, higher than expected profit, its stock price rise the next day. If it reports a loss, the stock might drop even if revenue was strong. So this is very important. As traders, you're looking out for this because if there's earnings report, the previous night, typically they do anything. Some of this earnings report. I've been in some of this earnings reports lately. Tesla's earnings report where Elon is speaking, talking about the company, where they are, different things. And this stuff, they are not like you have to pay for it. You just have to join in. Sometimes it's played, it's on Twitter, on X. You just have to tune in and listen. And it's important that you listen to some of these things, right? So sometimes, they do this after the market, right? When the market's closed, after 4 p.m. or 4:30, whatever, market's closed, they do some of this earnings report, in the evening, and, you hear what's going on with the company, right? And the next day, the market quickly will react, right, or respond to the earnings report. You see how price might drop on the stock, price might go up, demand, because it's strong. There's a strong performance, right? And it tells us as traders what you should be looking at, right? Because we trade by what we see, right? We trade by what we see on the market. If there's a demand green, there's demand going on, that means we want to buy and ride with it because performance is strong and people like it, right? So earnings report, right? Earnings report. This is a good report for us to know, right? That what is happening, right? Earnings report. All right. Now we have indexes, right? Indexes. 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 Something that you guys should know, you guys should be aware. An index is a group of selected stocks that represents the performance of a market or a sector, right? I talk about it as well, very little, but here I want to drive this point home for you guys to understand this, right? So a group of what? Selected stocks that represents what? The performance of a market or a sector, right? So example, the S&P 500, it tracks 500 large US companies, right? Can you guys imagine? So instead of trading or, buying stocks in specific companies like Apple, Tesla, whatever, et cetera, you will rather you are better off maybe trading maybe the S&P 500. Why? It's a combination of all these companies together, right? So it's good. So if one company is not doing well, guess what? The other company serves as, that company that are doing well, sort of even it out, right? Helps it a little bit, right? So some of the companies that are in the S&P 500. I think the last time in our demo, let me trace. I see if I can bring it up again, so that you guys know the companies that are in some of these S&P. So when we say S&P, for instance, what are some of the companies that are in the S&P? Let me bring this up here so you guys can see the companies that are in the S&P 500 as an example, right? As an example. Can you guys see my screen? I'm on a web page right now. Can you guys see my screen? Put in yes, 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 yes. Guys, put it in a comment quick. Let me see. Yes, yes, yes. You can see. Okay, all right. So when we say the S&P 500, 500 of the largest company in America, right? You can see Apple in there. Apple is right in there, right? Apple has the weight of Apple in there is about 6.67%. That's huge, right? Microsoft is in there. Nvidia is in there. Amazon is in there. Meta, that is Facebook, is in there. Berkshire Hathaway, Warren Buffett's company, is in there, right? Alphabet Inc., that is parent company for Google, right? It's in there. Tesla is in there. Broadcom is in there. All these companies, JP Morgan Chase is in there. So 500, guess what? If you are trading the S&P, that tells a story, right? Because you are trading a basket of 500 of the largest companies in America, right? 500 of the largest companies in America, right? 500 of the largest company in America. This is huge, right? This is huge, guys. This is huge. So if I look Bank of America is in there, Salesforce is in there, Cisco Inc., McDonald's is in there, Oracle, all these companies are what? They are all in the 500. Uber, right? You guys know Uber, right? Uber is in there. Boston Scientific Corporation is in there, right? Pfizer is in there. American Express is in there. So all these companies, they are all in the what? S&P 500. Whilst I'm still here, let me also talk about the Dow Jones because I'm here on this page. So let's look at a company that make up the Dow Jones. So, if you're trading an index called the Dow Jones, right? Trading an index, that is what? 30 of the what? Great companies as well. The Dow comprises of 30 companies. It tracks 30 blue chip US companies. So all these 30 companies are great companies, right? 30. This is 30. Anytime you hear Dow Jones, Dow Jones, Dow Jones companies, Dow Jones, right? Dow Jones. The Dow Jones comprises of what? 30 blue chip. It tracks 30 blue chip company, US companies, 30 great companies. These companies are strong, right? Anytime I'm trading, the Dow, they say we are, in trading, well, we say is the most strongest, right? Very strong. 30, this is 30. It's not a lot, right? It's not like the S&P 500. S&P 500 is great, but Dow is like the only 30 companies, right? Strongest company, blue chip companies, right? Well, you know the definition of a blue chip. Tracks 30 blue chip companies in the US, right? So all these companies, can you imagine? United Health is in there. Goldman Sachs is in there. Microsoft is also in here in the Dow as well. Home Depot, Sherwin-Williams, all these companies, 30 of the strongest companies, here in the United States, right? And then we have the NASDAQ. The NASDAQ as well. The NASDAQ. The NASDAQ is predominantly tech-heavy, index company. It's predominantly, technological companies, right? Technology companies, right? The Nasdaq is heavy on technology, right? These are companies that are heavy on tech. There are other companies in there, but heavy. It is technology bias. Let me put it that way, right? Its overall outlook, technology bias. Tech heavy index, right? Apple, Google, Tesla, they are all in what? In the NASDAQ, right? So when people are trading the index called the NASDAQ, they want to trade that. Why? Because it has some of the strongest, tech companies in there. Netflix, right? They are all in there. Costco, they are all in there. Meta, Facebook, that's Facebook in there, right? They are Intuitive Inc., right? Adobe, they are all in. Qualcomm Inc., they are all in what? In the NASDAQ, right? The NASDAQ is also 100 of the best companies, now it's even 101. That's like 100, right? It's also there. And then we have the Russell as well. We have the Russell, the Russell. So, but, we say the movers, the S&P, the NASDAQ, the Dow Jones, that is what we are talking about. These are big indexes, right? These are big indexes to trade, right? So it is a group of what selected stocks that represent what the performance of a market or a sector, right? So S&P. So you hear people say, oh, "I'm trading the S&P 500. I'm trading the S&P, the ETF, the S&P." So I'm trading the futures, S&P as well. They are all great, right? Or the Dow. You trade the Dow on the ETF, right? The stock, ETFs, that's a Dow. Very strong, right? Because you are tracks 30 blue chip companies. Very strong. Or the NASDAQ, right? When these indexes, rise or fall, they reflect the overall market mood, right? Any of these indices, right? Whether the S&P, the Dow, the NASDAQ, yeah, the Russell is there, but the Russell is not really, strong like, this three above here, right? If any of these, indexes fall or rise, right, it affects the overall market mood. When Trump was speaking on Wednesday, guess what? The S&P dropped almost, over $2 trillion. So you can imagine the kind of impact that will have on the market, right? The mood, the market will switch. There's going to be a mood swing for the market. The market will go to a sad mood, right? There's going to be a mood swing, a mood switch in there, right? Uh, because if the S&P alone is about 2 trillion down, yeah, that's a lot, right? That's heavy, right? That's heavy, but that's the indexes, guys. That's the indexes. That is the indexes. That's how we trade. We trade some of these indexes, or you can trade, like I already mentioned, individual companies and their stocks, etc. You can trade them, right? We get into all of that as well. You can. This is hey for me. I just want to trade the indexes. Hey, it's all good, right? You can trade the indexes as well. Okay, all right. What is the time? What is the time? Ooh, okay, we're going to end here today, right? We're going to end here today. The next slide says, I can see the next slide can say, what is trading? We're getting into the meat and potatoes, right? We're getting into the heart of things now, guys. Wow, wow. Tomorrow we're going to start off with that. What is trading? What is true? We get into the heart of things now, right? We get into fundamental analysis. All right. All right, so we have 5 minutes to end our session for today. So I'm going to unmute you guys. Um, I'm going to unmute you guys to questions, right, on what we have talked about so far for today, right? It's been great already. We're hitting our 9 a.m. mark. So 5 minutes more. I'm going to, you guys can even unmute yourself, right? Let me see. You guys should be able to unmute yourself. So questions, and then we'll be getting ready to wrap up here, and then we'll decide on tomorrow's timing, right? I already shared some timing for tomorrow's class. We'll have to decide on one, right? It cannot be something else. It has to be one or the other, right? So questions, put in the chat box, or if you want to speak, hey, I'm all for it. How you guys liking the first day one session so far, right? Do you guys want to unmute yourself? Go ahead, unmute yourself, and then um, day one, guys, day one. How is the ride so far? Is it bumpy or a smooth ride so far? How is it going for you guys so far? A lot of information, right? A lot of information. Is it information overload? I don't want you guys to get, information paralysis, right? How how did it go for you guys? Day one, smooth. Okay, all right, smooth so far. Right. Tomorrow we're going to get into the meat and potatoes, right? The meat and the heart of things. We'll kick off with the trading itself, right? And then we start getting into fundamental analysis tomorrow. Wow, 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 wow. Tomorrow. All right. So questions. Are there questions so far? Questions. That I can answer for you, that I can be of help for you today on day one. Day one, guys. Day one. All right. So I'm going to end the recording, and then we're going to decide on the on other stuff.